Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now. There's been a lot of talk since Tesla reported earnings about the impact of the company's pricing decisions on earnings, on revenue, on demand. So I wanted to dig into exactly what's going on from Tesla's pricing standpoint, how that impacts margins, and what we're seeing from a cost trend perspective. Because if you're going to lower prices but costs come down at the same rate, that's great. You can generate high margins even if the cost of your vehicle is coming down. But is that exactly what we're seeing? That's one of the things I want to dig into today. My name is Travis Hoyam. Thank you for watching Rive Investing. Please subscribe here on YouTube for all my content, including a lot of EV talk these days. The first thing I want to look at is the trend we're seeing for revenue per vehicle. Now, this is the revenue that Tesla is generating per vehicle, and I've excluded the clean energy credits here. But you can see that revenue is coming down per vehicle, and that shouldn't be all that surprising given what the company has done with pricing, especially in the last 4 or 5 months. You can see there's a little outlier here in Q4 2021, but the general trend from Q1 2021 through the second quarter of 2022 was that Tesla was raising prices, and pretty significantly. There was about a $10,000 price increase from $48,712 per vehicle to $57,300 per vehicle. But that has reversed in the last couple of quarters, and that has actually completely reversed. In the first quarter of 2023, the average price of a Tesla sold was $47,207. Now remember, that's before the most recent price cuts that we had. So second quarter, we're probably looking closer to $45,000 per vehicle. That's the trend that we're seeing. And one of the things that I think has gotten lost for Tesla over the last few quarters is really that the company reacts more quickly than any other company to supply and demand dynamics. This is for better or worse. When there's very low supply in the market of vehicles overall, like there was during the pandemic, demand for vehicles still exists. Tesla was one of the few companies that was making plenty of vehicles, and in particular, plenty of small vehicles like cars and small SUVs. While they were making those vehicles and the electric models that they make, other companies were focused on trucks and larger SUVs. That's where they make their profit. So the dynamics were really in Tesla's favor during the pandemic, and that peaked in the second quarter of 2022 when their pricing peaked. But we have seen over the last few quarters that Tesla has had to reduce prices in order to sell the vehicles in its system. I also want to note that since the second quarter of 2022, the inventory on Tesla's balance sheet has gone up nearly 75,000 units, 75,000 vehicles. Now, they will say that some of that is due to the fact that they're delivering vehicles a little bit differently. They're not getting vehicles out the door as quickly as they can right before the quarter ends to make it look like they have lower inventory. That's absolutely true. But that doesn't account for 75,000 vehicles in the inventory. It doesn't account for the fact that you can now go to a Tesla dealership and get a vehicle, whereas a year ago it was a 6 to 9 month wait. There just is simply a different supply demand dynamic today than there was a year ago. I don't think there's any questioning that, and we're seeing that with the pricing. So how does this impact margins? This is really the next big question. So prices are coming down, we do know that. But what's happening to costs? Once again, this is the cost per vehicle for Tesla. Costs have come down slightly since the second quarter of 22 when everything peaked. At that point, costs were $42,700 per vehicle. Now they're $38,500. Typically, over the last 2 years, we have seen the cost per vehicle fluctuate between $38,000 and $40,000. Really, the second quarter was kind of an outlier. So that's really where costs have been. We may see a little bit of a decline in the first quarter of 2023, but I don't think it's a big enough number to say that it's going to definitely offset the price reductions that we've seen Tesla put in place. And that's when we get to gross margins. This is the gross margin per vehicle for Tesla. You can see that there's just no question about it. Peaked in first quarter 2022 and has fallen off a cliff since then. I'll give you the exact numbers here. In the first quarter of 2022, each vehicle, Tesla made a profit of $15,675. In the first quarter of 2023, that profit had fallen by almost 50% to $8,719. The bottom line here is that the price reductions that Tesla is putting in place is really impacting their margins. That's why net income was down in the first quarter of 2023. That's why investors are questioning how much pricing power Tesla really has. Now, management will talk about future revenue from autonomous driving, but that's not typically the way the auto business has worked. And we don't know that that is actually going to come to fruition. Are people who bought a Tesla 4 or 5 years ago going to want to pay $15,000 or $20,000 to get an autonomous driving feature to have a robo taxi? I have significant questions about that. So at the end of the day, we want to see profitability in the core manufacturing business, and that's deteriorating right now. That's just a fact at Tesla, and here's the numbers behind it. But I'd love to hear your thoughts on Tesla's pricing decisions, the direction of margins, anything that I covered in this video. I know there will be a lot of opinions, so I'd love to hear what you have to think. Thanks for watching, everybody. Don't forget to subscribe to Rive Investing, and I'll see you here next time.